Yeah, merci, Samuel, for this kind introduction. Thank you very much uh, to all the panelists present here, and also the participants. This is my great opportunity to tell you that it is a good afternoon from Bangkok. We are based in Bangkok, and we have also offices in Beijing and Manila, and we work in 24 countries, as already spoken by Samuel. So this particular session is basically will be based on our study, which we did concurrently with FAO on a global landscaping of what is the current status of green finance or climate finance to agriculture and agri-food sector. Can you go to the next slide, please? Yeah. So this session is understanding the climate finance markets and entry point to African agribusiness. To be very frank, we do not have much of the document from Africa, but some of them are definitely there, which are very helpful for this particular session and for this particular webinar. Can you go to the next slide, please? So we have a list of shopping list kind of a thing, like eight outline, but I will be skipping some of them because it is because of the paucity of time. I have been given only 20 minutes to speak on this, but I mean some of them are really required a lot of volume of discussion and all. But I will be trying my best to keep it within the time. Next slide, please. So if you see the introduction and where we try to put the issues and the pain points. So some of the issues and the pain points are common in any agri-finance, which are also similar for the green finance or climate finance to agriculture. As you know, that collectively the greatest cause of the biodiversity is agri and the food sector in the global greenhouse emission, which is one side. It is an opportunity as well to deal with this. Then the climate change continues to increase the strains in the global food system, which we are facing nowadays, and with special reference to Africa. Then small scale agricultural actors. I think our previous panelist was also talking about the small scale agriculture as well as the importance of the women and the youth in agriculture and how they can deal with this. Then the green finance and agriculture subject to the barriers that have traditionally affected, as I said, the agricultural development finance, in addition to the barriers that are typical for the climate and green finance. Now, what we did is the engagement and action by the global community. There are a lot of engagement and action. Some studies, IFA, FAO, WFP in 2015, like 7 years back, they estimated 105 billion is needed annually for global adaptation to climate change. Here, one major issue I would like to flag here, that most of our study and the discussion will be on the adaptation side, not on the mitigation, because in most of the cases, the climate finance as such is considered as a financing to mitigate the climate events. So a question always comes, what is a climate finance? But to me, it is both. Like, one is a financing to mitigate the climate events. That is one. The second is financing to prepare the resilient community which need the adaptation. So we will be mostly focusing on the adaptation. Then the Food and Land Use Coalition 2019 estimated that an annual investment between USD 300 to 350 billion for the transition towards sustainable food system and land use in order to achieve the Agenda 2030. So IFAD and the CPI report of 2020 estimated that the financing support to address climate change surpassed $500 billion in 2017 and 18, but only 10 billion has reached to the smallholder farmers annually, which is a very, very important point here. We would like to focus more on this. Next slide, please. Now, the first issue which actually bugged all of us is, what are the taxonomy? How do you define a climate finance? What are the other issues related to the climate finance? So one we tried here is to provide a broad spectrum taxonomy here. First, start with the sustainable finance. What is a sustainable finance? It's a focus on the environment, social, and governance, which is, we call it the ESG in the investment decision. That comes as a sustainable finance, which across like all the sectors will face the similar issue for the ESG, how to monetize the ESG. The second one is the green finance, which is a subset of the sustainable finance and considered to be a broad umbrella referring the investment that provide environmental benefits to the broader context. Now, coming to the climate finance. Climate finance is a subset of the green finance, which is referred as a financing dedicated to the adaptation and mitigation. See, I put adaptation on the first, then mitigation in the second, because we took mitigation in the green and sustainable finance. So, and change, which actually, aiming at reducing emissions of GHG, reduce vulnerability and increase the resilience. So the community resilience here. And four is the green finance to agriculture, which is a climate finance, or you can nomenclature is as a climate finance to agriculture. Finance to agri-food sector with an objective to achieve resource efficiency, environmental sustainability, climate smart approach, like our previous presenters were talking about the climate smart agriculture, then enhance the quality and safety of agri-food system. Now, another new area has come up, which is inclusive green finance, which I have given at the side of it, which I know we are working with AFI and also IKI, the government of Germany, on this defining the inclusive green finance. It is the evolving policy area. Basically, this work with the policies, which implement the policies, regulations, and national strategies. So the importance here is the national strategies, which is flagged here. Next slide, please. Now, what are the drivers of green and climate finance? There is a study made by the Global Green Finance indexing. So GGF index value of 2021, if you go through, you will see that the policy and the regulatory framework is the highest index value of 354, whereas loss of biodiversity is only 17. It means that everything is available on the horizon, but the policy is the most important issue here to drive the green and climate finance. And the second one is the investors' demand. What the investors demand from the policies, what the climate change is the third part of it. If you see the index value, climate change is the third part of it. Public awareness is the fourth, which one of our previous presenter was talking about, the capacity building, mandatory disclosure, so on and so forth. So, but if you see policy, investor demand, and climate change, public awareness taking the major driving force of this green and climate finance. Can you go to the next, please? This is a little bit busy slide, but if you go to this, we talk about the instrument. I think I think everybody is interested to know about the instruments and the archetypes, who actually do what. So what we tried here to provide you the green finance instruments. There are majorly 5 instruments are available in green finance. There's a debt, equity, debt plus equity, credit enhancement, which are mostly the guarantees, and the risk transfer. So all these are common If you see your credit portfolio is also the similar, but there are certain differences where you have the approaches. There is a difference in approach and difference in the features. And if you see the global architecture or the global archetypes, there are domestic public finance, international public finance, and the private finance. So the majorly it is domestic public finance, which is national level, and also the international public finance. They are basically providing majority of the global architecture, whereas private finance come at the last part of it. Now, the financial instruments available under the common agricultural policies across the nations in Africa have the significant potential for contributing the achievement of the Green Deal, which is very important word, is the Green Deal ambitions, and more specifically to the farm to fork biodiversity and bio strategies across the continents, and with specific reference to African continent. Go to the next slide, please. Now, climate and green and climate finance ecosystem. We tried here to provide the ecosystem as such. Apart from the global archetype and all, there is a public support mechanism. Then public support mechanism divided into two parts: policy and overarching supports. The other one is a project level assistance. So mostly, if you talk about with anybody, they will be mostly talking about the project level assistance, but we need to have specific importance to the policies and overarching supports, as our previous presenter was talking about the change in the policies, national level agricultural policies and all. So the public sector, cross-cuttings, and private sector all together coming to the green finance escalators. So there are four escalators we identified here. One is the innovation incubators. It's most important. Innovation incubators, networks and associations like our association is doing. Similarly, in Africa, we have Africa. In Near East and North Africa, we have Nenaraka, and in Alide is our Latin American counterpart. Then the research and advisory services, we have seen that most of our in cases that the scientists and the financial associations, financial institutions, they don't look at each other, which is not a good effect. So there need to be a research and advisory services available, and finally the international cooperation. It is not that alone a nation will be coming out. Even if they're coming out, the impact or the contamination will be there. For example, if South Africa is doing something great, but there are certain other countries which are not doing so well, so there is a contamination. So these are the four escalators we would like to flag here, that without the four escalators, we cannot actually go forward. So I just give you one example of what we have found. See, if you see the public actors, private actors, and the total, if you see the 2018, $579 billion has been invested in the climate finance. But out of which 253 come from the public actors and 326 come from the private sector. It seems that it is a good picture, but it is not. Basically, what we think that the public investment should bring more private investment. So it should be more than two times of the private investment, of the public investment. But if you see 253, 326 is less than even 1.25. So there is still a gap of the private investment coming to the green finance or the climate finance. Next slide, please. Now, global trends. If you see the global trends in green finance, you see that the global sustainable debt on annual issuance of Bloomberg, they have found out that there is a sustainably linked bond, but most important is the green bonds. So green bonds has taken over all other types of investment. So green bonds becoming the torch bearer of the whole climate finance or the green finance landscape. Now, if you see the sectoral allocation of the green bonds, see the sectoral allocation in agriculture, it is only 17%, which is really not a no good picture for all of us, because we already saw that 33% of the GHG emission actually coming from agriculture, whereas the investment is only 17%, which creates some kind of gap. Next slide, please. No, we tried to define some of the demand and supply analysis here. What we found that the supply side, there is a reason. There are reasons for slow move. What are those reasons? Traditional.
Sorry to interrupt you there,
Yeah, please.
Dr. Kumar. Yeah, I just want us to have an interactive discussion here. You've just given all this excellent taxonomy about climate finance. You talked about the different sustainable financing, right up to integrated green finance for agriculture. The question is now is, and also in the morning we learned about the flux of these finances globally, especially to the global south. And we observe that the region where you're coming from is really getting significant of these finances. I just want to keep you out of your comfort box a bit. What, as an expert in that area, what would you advise Africa policymakers, Africa enterprises? Perhaps before you get, because we're running out of time, we have about 10 minutes more. So I want to kickstart that discussion now.
Yes. Yes. Thank you, Samuel, for this bringing this. I'll be coming to that. Because the supply and demand analysis is for a global south, as you said rightly, it is also applicable for Africa. We have some examples from Africa, as well as I will go to the what actually the next, what should we, how should we go forward? That I'll come in the next slide. So there are already extremely challenging, which are embedded in the risk to overcome and limited knowledge of green agricultural development, lack of tailored financial products, and inadequate alternative collaterals. Because I have been traveled to Africa a lot, and I worked with many of the central banks. We found that collateral has become a very important issue in African financial institutions. And if you see the demand side, reasons for slow move, there are reasons. Slow pace of adaptation to climate and natural hazards. Good agricultural practices affected by a range of uncontrollable factors, and non-diversified household income. This is very important, that the household income has not been diversified, which is very much required, and low level of awareness, which I think all of us will agree. Now, coming to the green climate, next slide, please. So there are two issues only, which I would like to say, that 1.7% of the global finance goes to the small scale farmers, of which Africa is only getting 0.8%, which is also important to flag here. The other important challenge which the climate finance are getting in Africa also, which is applicable across the continents, one is that the greenwashing. Most of the it is very important that that the funding agencies to ensure that there is an incidence of greenwashing by the issuers of green finance, which is important to note here. Next slide, please. Coming to the four types of innovations, we have identified innovations in delivery, innovations in policies, innovations in technology, and innovations in risk proofing. So I'm not going into the detail of it. We have some innovative risk proofing mechanism which is developed under this particular study, which is applicable for Africa. Next slide, please. Coming to the policies and regulations, which are specifically for Africa, and with special reference to the Sub-Saharan Africa as well as the Western Africa as well. So macroeconomic policy. There are risk reduction promotion of agricultural business, which is important policy. Risk mitigation instruments. You have to apply your mind for supporting the insurance, which is very, very poor in African continent. And the structure incentives, which is also important. Now, what do we need? We need a policy promoting flow of private capital in green finance or climate finance. Second, enablers for institutional investors in green agri-food sector. Broad policy areas to support green finance instrument, macro and micro prudential norms at a national level, market making and credit allocation with the NDCs. Take the NDCs. If you see NDCs of any country in Sub-Saharan Africa or for that matter African continent, there is no clear identification on agri-food sector. So NDC is a total, then you have to categorize it to agri-food sector. Now going to the next slide, please. Yes, some of the best practices I have identified, I have given it only 3, but there are a few more. For example, inclusive, Yield Uganda Investment Fund, which is the IFAD fund. They are trying to develop both sides of the agribusiness and as well as more on climate smart. So if you see this ECOWAS, which is a 15 country in the Western African, say they supported a blended fund, which is basically the innovations in the delivery. So blended funding for the innovation in this ECOWAS of the 6 countries here in this particular particular $80 million project, where the technical facilities and no intermediaries are there, the financial institutions, they design the investment product linked to climate smart agriculture. Now, next one is the inclusive green finance and climate resilient and low emission smallholder agriculture in Niger. So if you see the project value is very small, 13.1, I was involved in this particular project where I could see that the project incentivized the participation of the private sector here. There is a limitation that up to $1 million can be provided to each of them. So the third one is the green microfinance by VIRL financial services in Zimbabwe. So these they have collaborated with the HIVOS green performance program, and they are now coming up with $19.2 million with 25,000 households. Next slide, please. Now, what are the findings? As I said, that there are lack of common definition, as is one of the major findings. The nationally determined contribution has to be no specific sub-targets. There should be a specific sub-target. Then green finance is cued to clean energy development rather than the agriculture. Agri-food sector investment in most of the cases delinked with the downstream. That it means that there is no value chain development in the whole process. Innovations in agri-food sector is not supporting environmental impact. And finally, the hurdles of designing commercially viable agri-resilience fund, which we did in Asia, in some of the countries. For example, in Malaysia, we did it with the Ministry of Agriculture there. Then lack of policy level commitments. There are policies, but commitment is really, there is a lack. Now, I'm not going into the enablers and drivers, but I will go to the next slide, please. Now, what are the key recommendations? Intensive policy level engagements, which are coordinated engagement, establishment of institutional structure to support green finance or climate finance, incentive, and setting up of medium long-term priorities for green finance to agri-food sector. For example, we did for the credit program for microfinance program similar, we need it for the green or climate finance. Then coming to the floating of green bonds for the sourcing of long-term funds for agricultural development. Specific bonds, green bonds for agriculture. You have seen that only green bonds, agriculture going only 17%. Promote regional and international cooperation, what actually now we are doing. Scaled up engagement with the financial institution level. In most of the cases, we forget the financial institution, which is very important. Central banking and regulatory policies. Actually, this particular program should have been joined by many of the central bankers across the continent of Africa, which they need to understand more on this. Then capital market, which is also important, as I think some of our previous speakers were talking about the capital market development, the carbon market and all these things. How we can incentivize them. Then strengthening public-private partnership. This is also very important. And finally, the post-COVID-19 green growth push, which is required to re-stabilize the whole economy, agricultural economy. Next, please. Now coming to the walk the talk. What should we do now? Inclusive and representative taxonomy. Need to optimize and draw lines of defining green finance and climate finance to agriculture, which is still not defined at a national level. Expanding the fiscal incentive. Expanding, you have to do the broadening of the fiscal incentive to the and expand the boundaries of fiscal incentive. Innovations in financing mechanism. You have to have a design the innovative financial mechanism from the investment vehicles and financial instruments. Bridge the disconnect of demand and supply. There is disconnect between the demand and supply, and finally strengthening the global pooled green financing mechanism. That any national institution cannot do it. So we need to have a global pooled green finance mechanism. Thank you very much. I think I'm done. I took 5 minutes more, but I wanted to provide all the information I do have.